Welcome to the Business of Property podcast. I'm Stuart.
I'm Simon.
And I'm Emma.
And we're all property people running our own businesses. And this podcast is just us chatting, as we often do, about anything and everything property. And today we welcome back Emma. So thanks, Emma, for joining us again today on the podcast.
Thank you for having me.
I would imagine we've got lots of content to talk about, given all of the things that have been happening since we last spoke, which was a few months ago now. But just very quickly, if you wouldn't mind, I know you've introduced yourself before, but just remind the audience who you are and where you come from, and we'll get into it.
Yeah, so my name is Emma Halliwell-Marks, and I own Estate Agents Hub, which is a very small sort of bespoke agency. We're based in Reigate in Surrey. We set up just over a year ago, so we've had a very interesting first year of business.
So what's been keeping you busy in the last few months since we last spoke then, Emma?
Yeah, well, I think we last spoke mid-lockdown. I think it was sort of May type time, May, June. So
yeah, something around there.
Yeah, I think it was at the time where there was no business. The estate agent market had totally shut down. No viewings, no valuations, nothing happening. Everything was on pause. So since then, we had the fairly sort of surprising announcement one Wednesday night, I think it was, saying that the market could reopen the following morning. And it was a bit like, oh, wow, okay, weren't quite expecting that. And that was just before the lockdown sort of fully lifted. And it's been a really interesting few months. And a lot of changes really within that few months, which have affected everybody. Initially, for the first month or two, couple of months, really quite a lot of business. Any properties we had that had been sort of sitting on the market during lockdown went under offer incredibly quickly, had a huge amount of buyers coming out. Pent-up demand was massive. Obviously, a lot of people who had their market on pre-lockdown, or property on the market, pre-lockdown, or who had gone under offer, were sitting, waiting during that time. So the moment things were lifted, they were ready to go. And lots of properties came on the market. And again, the market really has felt very buoyant. That was supported, obviously, by the relief on stamp duty, which gave everybody an extra impetus. You know, the people who've been thinking about moving, or will we wait a bit? No, let's just try it now. So that really did get the market moving. What's challenging now, perhaps, as we enter another lockdown, certainly things seem to have slowed a bit immediately this month. The phone's not ringing so much. The uncertainty of jobs, of what's happening next, we're starting to feel that impact. There's a lot of talk in the business sort of broadly that as we come into next year, basically, if you're not under offer fairly soon, you're unlikely to meet the end of March stamp duty relief deadline. And what will happen to the market after that? And, who knows whether they will extend that deadline for stamp duty relief or not. So there's a lot of uncertainty, I think, moving forward.
But as we were coming up to this new lockdown, which of course people had a little bit of warning for, so I'm sort of talking before that warning came about, had you started to see things sort of demand slow a little by that point, or do you think it really was the lockdown that's triggered the sort of the slowing that you've seen?
No, I think it was slowing anyway prior to the lockdown, and I think this lockdown hasn't actually affected the business. We can still trade as normal. We can do viewings, we can do valuations, we can carry on as normal. Solicitors are carrying on as normal. Mortgage companies, people are working. I would say that there was, certainly from our perspective, there had already been a slowdown, and this just feels as though it's sort of accelerated that little bit of slowdown. And that's of getting new properties under offer, and that's the buyers coming in. Certainly anything we've got under offer, the process is snail's pace. Solicitors are slow. Mortgage companies are slow. We're having a few down-valuations from the mortgage companies, which is sort of obviously slowing the process because we have to redo paperwork and go back via solicitors, etc. We've had a number of emails from solicitors sort of saying, basically, to their clients, can you not contact us, please? We're very, very overrun. We will contact you. I know, it's crazy, isn't it? They're paying these solicitors, and the solicitors saying, please do not email. We will not reply. Only contact us. We've contacted you first. But they've taken on this pent-up demand post the initial lockdown, and then the property picking up, and they've just taken on a massive work. and they haven't really got the capacity to be dealing with it efficiently. And everybody's got an end of March deadline, or before then they want to be through.
Yeah, quite. Where you've had down valuations, and you say you've had to redo paperwork, presumably that means the sellers have been okay to accept a reduced sale price. Has that been the case for the ones you've seen and been involved in, or have any fallen through because of down valuations?
Or they need more money.
Yeah, I mean, thus far we've had situations where down valuations have happened, and the mortgage company will only continue with the mortgage if that valuation is what they pay. They can't pay over that. You know, they say this property valuation is 400,000. You know, the buyers cannot top up an extra 10 grand on top. They will not give them that mortgage if it's paid over that. So it's like,
wow, that's quite strict.
And then the option then obviously for the buyer is to accept that lower price, risk the buyers going back to another mortgage company to try again. You've got risks there. They might not get another mortgage. That might be downvalued even more. And whatever happens, it's going to slow down the process. And at this stage, it could slow down the process to the point of not meeting the stamp duty thing. So they're going to lose money. You know, it's a really pros and cons, careful balancing act. So far, we've kept those chains together because actually we've just had a couple of really very pragmatic sellers who want to keep moving forward and don't want things to fall apart. And also, at this stage, you're often quite a long way down the line. To then go right back is, you know, it's taken long enough to get to here. So we've had very pragmatic sellers, but, you know, and some of the buyers have got a bargain.
Can you give us an idea of scale of these down valuations, either sort of money-wise or percentage-wise or whatever?
Well, I mean, I was the one we've had is just under 10%. And I was talking to my mortgage advisor who, and she was telling me about her mother's house that was downvalued by over 20%. And that was a 3-bedroom detached house. It's in Ipswich. It was on at 250 and it was downvalued to 200. You know, it's massive percentages.
It's crazy.
Yeah, I mean, and certainly with the properties that this has happened to with us, you know, we've had really good market response. You know, we had a property on at around the 450, went under offer at 430, downvalued to 400. And we had buyers, you know, and the market, certainly comparables support those prices. And all I can think is that, you know, mortgage companies are obviously worried and more reluctant to sell, and they're projecting, I suppose, worst case. And, you know, so the buyers, and I suppose, you know, if that happens all up the chain, everybody just readjusts their expectations, and in a sense, nobody loses out. It's only if it's just at one point in the chain that it becomes an issue. So it's
at the moment, though, this is still the rare situation. Yes, the down valuations. You haven't seen that many of them, or?
Well, according to when I spoke to the mortgage advisor just to sort of advise me on this particular case this morning, she said it's happening a lot. So, you know, we haven't. We're very small, so I don't have a sort of you know, enough to judge myself. But she said at the moment it's very common.
I suppose my mind jumps to me. That's why my mind jumps to me immediately to potentially the buyers putting in more money, because it would seem to make more sense. I understand that the banks want to cover or mitigate as much loss as possible, but if they were saying, well, okay, we've got a valuation that's 20% lower, and therefore our loan to value will be against our valuation. But if the value is still agreed to be higher, then potentially the buyer would put more in. And I suppose that's where I'm coming from. The banks could.
How many buyers have got a spare 30,000 or so though to put extra money in? I mean, they're big chunks.
Well, I think that it is big chunks. It's not an extra. I mean, and okay, you could be sort of let's meet in the middle somewhere. Also, the buyer's just been told the property is worth so much. They're then reluctant, understandably, to put more money down. But I think it's very dependent on the mortgage company. But certainly some mortgage companies, if the price that you're paying on that paperwork is above their valuation, they just will not lend, even what, you know, based on their valuation, they just won't lend to you.
Yeah, it makes sense. I suppose I'm thinking because I've done a couple of independent valuations recently where I just get my own valuation of a property prior to doing anything. But of course, in a standard residential chain, your only valuation is the one that the bank's providing, and then there's going to be a lot of reticence to buy more if that's what the bank's telling you.
Yeah. And I mean, in a sense, you're going to go with they won't lend on more if we're paying more than that. And again, that's dependent on the particular bank. And there will be occasions, fine, yes, you go to a different bank and you hopefully have a broker who knows the different surveying companies that they use. So it's a different company who may come up with a different valuation. But again, it's everything is so slow at the moment. You're sort of adding different layers of risk, I think, as you go along. But.
And so your experience so far then is because I completely agree. Having been in these chains at the moment, I've got 2 properties that are sale agreed, but you get to that stage, it's been downvalued, and the vendors therefore stomaching that loss because, like you say, I mean, if someone else came along and wanted to borrow, you're talking at least, I would say 4 to 8 weeks in my experience just to get another mortgage offer sorted.
Yeah.
So the vendor has to stomach it.
Yeah. That's certainly the experience that I've had, because any solutions just slow or halt the process. And if you've got a chain, then who knows the impact of that further up or down.
Yeah, it's interesting because when you look at all the figures at the moment, we are seeing prices are, the numbers I've seen are on average about sort of 5 and a bit, anywhere between 5 and 8% higher than a year ago. So we are still in a positive trend, but it sounds like the banks are sandbagging in advance of the stamp duty holiday and furlough removal and that kind of thing next year. Would that be your thinking?
Yes, I think the trend is still positive on prices, but I was talking to my colleague this morning and it just actually kind of totally undermines our valuations based on the market, because if they're then undervalued, you can get a very realistic, what we perceive as a very good, realistic, sensible price for a property, but you've no idea at the moment what a mortgage company is going to do. So the trend, yes, is still looking quite positive in the property market, but actually if the mortgage companies continue to downvalue regularly enough, there will be an impact.
Yeah, I mean, if property valuations have gone up, or property prices have gone up by 5%, say, which is what some of the reports have been saying recently, if you've then got a mortgage company coming along and downvaluing by 10%, the net result is actually negative. So we're potentially looking at prices as they're actually sold being down already, just from the mortgage companies of knocking so much off the top from their pricing or their valuation, should I say.
I mean, it does almost feel like, estate agents have a reputation of valuing and then adding like 5% or whatever. And it almost feels like this surveyors of these mortgage companies coming in and valuing and then taking off 10% or whatever it might be. And so the discrepancy, I mean, at Estate Agents Hub, we do our valuations on a very evidence-based way. We look at properties sold in the area, we look at properties on the market, we look at properties under offer to give us a really clear idea of actually where your property is going to sit in the market and what is realistic. But if even our valuations are being, undervalued, it's very difficult to know then where to pitch things. Because of course you might get a surveyor who doesn't undervalue it. So do you still pitch at a sensible market price, or are you trying not to let the chain break down later if it's then undervalued? I don't know. I think time will tell. I mean, we're in a very unusual time now in the market. So I think, things will be a lot clearer. I don't know when. Will things be a lot clearer? Maybe in 6 months, 3 months?
Well, we can hope. Yeah. I think certainly in the next 6 months, there's a lot of change still to come. And actually, one of the changes that's very predictable in the next 6 months is, of course, Christmas. And traditionally, the market slows down for Christmas and the end of the year and things. How different do you think the current change of pace is this year to a standard year?
Well, I've been keeping quite a close eye on some sort of Facebook, estate agency Facebook type groups. And a lot of people are saying, this lockdown's caused another slowdown. A lot of people are saying this slowdown's normal for this time of year. So actually, is this what we would be expecting anyway? Coming into November, things tend to tick over November and then really, really slow down in December. So maybe this is, with sort of blaming lockdown, maybe it's just, exacerbated by that, perhaps, that it could be just a normal slowdown at this time. And it's then what happens in the January where, mid-January, things start to kind of pick up again. It's whether we see that come back.
Yeah, indeed. And we'll have to wait and see on that. Because, of course, there's lots of things changing at the end of this year that don't normally change very often. Like all of our extra customs paperwork and import issues and maybe trade deals or not trade deals or who knows what.
And uncertainty is the biggest thing that impacts the housing market. So
exactly. I mean, none of these things are directly going to affect property prices or the housing market, but everyone's going to be busy with lots of other things, and everyone's going to be very unsure about what is coming next.
Yeah, absolutely.
It's going to be an interesting time. So I know you've got to go soon, Emma, but I wonder if perhaps in the last minute or so you could tell us what's coming in the next 6 months, in your opinion. So given that everything's going to change, what do you think?
I think that there is likely to be, we're going to have the normal slowdown to Christmas. I think it will pick up again in the new year, but without sounding pessimistic, I think the uncertainty and the financial challenges that a lot of people are going to have, and the financial uncertainty, we're going to have a slow period to come. That's what I think.
Do you think the government will extend the stamp duty holiday?
No, beat me to it.
I don't know. I literally veer from, no, I don't think they will, because I think they need to start generating some income. And then I think, well, they kind of extended pretty much everything else, and they need the property market to still move. So I'm really sorry. I'm totally on the fence with that. Although probably if I had to go for it, I'd probably say I think they will.
That's my thought as well.
Yeah.
I hope you're right, because I'm buying. So obviously it's all about me. And
absolutely.
I don't think the house is going to be complete until April or May. So
yeah, maybe they'll give it till sort of July, just so that, because all the processes are so slow, they give everyone a few more months just to get everyone through. Fingers crossed.
Yeah. Well, I was just going to say thanks again, Emma, for joining us. I appreciate your time and just for sharing your direct experiences, because I think it really brings a lot of value to the audience. So thank you.
Well, thanks very much. And sorry I have to rush off.
That's okay. Thank you very much for joining us. If anyone wants to get in touch with you, there'll be contact details for you in the show notes. And do you want to just mention your email or URL or something as well, since it's in the audio too?
Yes, my email is emma@estateagentshub.com.
Awesome. So thanks everyone for listening to the show. As always, please do head to thebusinessofproperty.com for all of the show notes. And if you are enjoying the show and have got any value from it whatsoever, which we're sure you have, then please do leave us a rating or review, preferably both. Until the next episode.